ADP back to positive, and flight reduction pressure on the federal government, and more. Robschild. Hi everybody, it's Wednesday, November 5th, 2025. We begin with our first headline, ADP back to positive. Without data coming out from the federal government, we still have some data coming out for the jobs market. We have the ADP employment numbers coming out at a surprise to the upside at 42,000. The market was expecting 22,000. And the last reading of this, very notably, I talked about this a lot, being negative 29,000. Also, positive services numbers. Traditionally, ADP has been a second-tier piece of information to the government data until the government started making these giant revisions, and markets reacted a little positively today. We'll get into that in the charts. I want to note that the market expectations for the non-existing employment report, that is the next one, it's supposed to be coming out this Friday, by the way. It's expected negative 60,000, and the unemployment rate up to 4.5%. Markets today also reacted obviously to appeals court judges voicing skepticism about the legal basis for Trump's sweeping tariffs. I know that betting markets are saying now, with I think 70% probability, they're going to have to take back, I think it's just some of the tariffs. Apparently it matters what categories they're in. And our third headline, flight reduction pressure on the federal government. Today it was announced, this is from Reuters, a headline, U.S. orders 10% flights cut at major U.S. airports due to shutdown. One of the main ones that people worry about is the air traffic controllers, who are getting sick a lot more often now that their paychecks have stopped coming in. So this will continue to add pressure to the federal government to open up. Maybe the next catalyst, Thanksgiving. You know, a lot of people want to fly for Thanksgiving. On to our community topics. What moves, if any, did you make today? Robschild sits on hands. Comment below if you did anything today. And I wanted to also thank the community for your investing quotes. One that stuck out to me was someone commented, "It's never different this time," and it made me chuckle because, believe it or not, I don't think I've heard it phrased that way for some reason. Even though it seems to have been around, I've always only heard people say, "It's different this time," like sarcastically. And then, you can take it a step further and, recognize that black swans do happen and things that have never happened before happen all the time. So, the ball rating stuff is all quite complicated. Anyway, thank you again for all your quotes. I read all of them, and a lot of really good stuff. Thank you for sharing. Coming up, we have economic data still in limbo. Next catalyst, maybe Thanksgiving for the flights. After that, maybe Christmas, I guess, is what I see on the horizon. Initial continued jobless claims still on pause. Employment reports. Now, at the end of this week, we're going to have 2 employment reports now already, not coming out in a row. That is pretty epic. But we will keep getting those tariff updates as we did today. We also have Nissan earnings, I believe, coming out tomorrow on Thursday. Thank you for watching, liking, subscribing, commenting, and supporting. No changes to the ball ratings. And click on my website, link in the description, to read through my daily reminders, macro views, portfolio explain, and stock research center. And yeah, so sometimes I get comments asking about my portfolio. There's a lot of information here. If you're interested to understand my thinking and portfolio, it's pretty much all here. You click on these things and it opens up the explanations. So check it out. On to the chart, starting with the S&P 500 SPX. On just a simple chart reading basis, I'm going to say, believe it or not, this chart looks like it wants to get bullish here, as it seems that we are holding this line here as support for the moment, the top of October 10th candle. It's interesting to me, fear and greed index from CNN is still in extreme fear mode. Overall, even in the RSP, we've been chopping sideways since August. And since October 10th, we haven't seen any more, bearish engulfing patterns, any real bearish setups. On top of that, you have the VIX, it's cooling off today. We went up, we tested around 20 today, and sorry, you can't see that. And now we're at 18. This is acting like a blow off top. It's acting like it's going to head lower. We also had the U.S. 10-year Treasury note yield rise by 8 basis points today. So, you combine the fact that we got decent numbers from ISM, ADP. We also have maybe a bunch of money is going to be taken back from the government, back into the economy. If some of these tariffs end up getting canceled, which the betting markets are strongly betting that that's basically going to happen now, more cash is good for business, and that's, all these things allowed the 10-year Treasury note yield to rise today. Notably, pattern-wise, this thin red line, let's make it a little bit thicker. This is a pretty epic line going from this point here in August of 2022, connecting to this massive pivot point September of 2024, connecting exactly to the bottom of April 3rd, 2025. And we cracked below it. It's acted sort of as a magnet, sort of as a fight zone, and we pretty much stopped there today. And then on the upper end of this, I have this purple line here connecting the ultimate peak in May 22 to July 16th's peak, and that's still, I think that may serve as a resistance point. And that purple line, by the way, is part of a ginormous head and shoulders top on the 10-year Treasury note yield. So my chart patterns suggest maybe we're peaking here in the 10-year, or maybe we could get up a little higher to 4.2. But I'm still in the camp that I think yields are going a lot lower. One of the many reasons is crude oil, and it looks like we're accelerating to the downside now. And this inverse head and shoulders that looked like it may have been developing, it doesn't look like that so much anymore. At this point, I really think you'd need some geopolitical event to get an oil shock for it to go higher. Right now, it's pretty clear that the demand is not there to support higher prices. It was a little funny to hear about, potential tariffs being reversed, which is on the surface, it's anti-inflationary. And so you almost expect the 10-year to drop. But, you get the effect of potentially stronger businesses because of it. So that can send the 10-year higher if growth expectations start to rise. And on the other end, we know that, when this court thing resolves, it doesn't matter. There's other ways that they can do the tariffs. The tariff merry-go-round is nowhere near over. I also want to point out that the 10-year rising today definitely isn't, that much anyway, definitely isn't part of suggesting that, there's a worry of inflation exactly. Break-even inflation rate, it rose 1 basis point today. We're essentially going sideways, maybe even forming a bear flag in this chart, the 10-year break-even. Again, the Federal Reserve, they watch this like a hawk. They use this to determine what market expectations are for inflation. If this goes out of the control to the upside, they are forced to hike. And same with on the downside. If it starts falling, they have to cut, especially when we get to 2%. Remember, September of 2024, we were at 2.03 expected inflation rate. And that's when the big first cut happened before we paused again. The 10-year break-even inflation rate controls the Fed. So it's important to watch this. Next up, Bitcoin. We have been sort of testing this $99,000 level. And today we did get a bounce of 2.4%, but that's all it looks like to me. Right now we're in a pattern of lower highs and lower lows, accelerating to the downside. Can it be a blow-off bottom and go straight back up? Yes, it can. Or it can consolidate here, and then if it does that, well, then that's obviously sort of a bear flag, and then we can expect it to go lower. If you want to know where the stock market is going, check Bitcoin. It has been leading the stock market for a while now. DXY, the dollar index, did not continue to rise above August's recent high. I was starting to think, I talked about this yesterday, being an inverse M pattern. It looks to me at the moment like we might even be fighting at this level. If that's the case, that's a bull flag, and that would support the case for the dollar going higher. Or, we could go straight back down, or perhaps continue the pattern of higher highs and higher lows, right? So it's definitely not just gonna go completely flat here forever. It's itching to do something here. It hit its head on the ceiling, and so we'll see what happens next. Silver and gold. Everyone wants silver and gold. Still consolidating, just basically going sideways. Silver, $48. Gold, around $4,000. One of the largest holdings in the Robschild portfolio performed well today. EWZ, Brazilian ETF. I have this plus EWZS for the small caps of Brazil, and a leveraged fund of this BRZU. So that's obviously doing well. I still plan to hold this until what I consider a fair valuation to be at $42, which would put this fund at a dividend rate of 4%, which is still very high for an index of stocks. But I also don't need it to go lower than that. I understand the political risk here, but for now, this thing it's paying cash. It has a very high dividend to it, far above 4% right now. I was also wondering, is this move up in EWZ, is this because of the Brazilian real? Is their currency shooting up against the dollar? And no, it's not. It's just basically going flat. $1, or you can get, I think it's 19 cents with 19 cents American dollars with 1 Brazilian real. Another chart I wanted to bring up was the MOVE index with the 10-year rising, TLT dropping. Yeah, I know it's been going down a little bit, but interesting, right? I mean, we're still in this pattern of lower highs, lower lows that's been going on for quite a while now. Almost too much clockworky. Certainly, if rates start going up higher and higher and higher, the MOVE index will also be moving higher and higher. As it stands, nothing to flip out about with TLT dropping in my book. Again, never any advice on this show. Do your own research, make your own choices. But for me, I'm not scared out of TLT yet. Let's at least see the LEI stop collapsing. Let's see the unemployment numbers go down. Let's see the labor participation rate go up. Right now, TLT still remains my favorite place to be. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.